Yeah, boy! What's going on, everybody? Oh man, I hope you guys enjoyed that. I found that online. I didn't make that, by the way. So I don't know who to give credit to because I saw multiple versions of that. But anyway, I wanted to show you guys that. Maybe we should make that the new anthem or whatever. Maybe we could maybe we should just use that as our opening song and our opening visual there. But anyway, guys, it's good to see everybody in here today. It is another day, another dollar, as they say. It is March 26th, 2026. Today is Thursday. We do this every Monday and Thursday at 7 a.m. Eastern for Money Maxxi. This is where we talk about all things money. So today, this week, this last couple of weeks when it comes to money has been it's been kind of wild, right? Markets are just going up and down. They're just teetering, they're chopping people out. I know multiple people, they've been DMing me. So our Discord has been super active as well with people like posting trades and things like that. So guys, if you are watching this live stream right now, you should see some links to Discord, okay? So whether you're watching this on one social media app or another, in all the social medias that this is live streamed from, in the About section, you should see some Discord links. Click on that Discord link. It's to the Key Crew, Lock In, Breakout. Come join us. If you got any money questions, you can always join us in the Discord and join the VC. You don't have to show your face. If you want to bounce some ideas, maybe talk about some trades or maybe some money issues. We have other people who DM some questions as well. If you're not comfortable, with your voice out there on the internet, that's cool too. You can just DM it to me. We actually had a few people DM us some questions. A couple of weeks ago, we had somebody ask, how do you even get started in investing? Last week, we had somebody who had some financial questions regarding marriage. They were about to become a newlywed, and they wanted to have a financial conversation with their new partner and all these things, like how to have that conversation, all those kinds of things, man. So if you want to ask me those kind of questions and talk about anything money related, trading related, investing related, again, you can either DM that to me directly or you can come to the Discord, to the VC. If you're going to DM it to me, you can DM it to me. I guess the most popular way of DMing me is through the Discord. So if you actually look down in the bottom right-hand corner right here on the live stream, you should see everything that I do is Rooster Brewster. The last E is a 3. Okay. The last E is a 3. Everything is Rooster Brewster. So my X, my YouTube, Insta, all the Purple app, Discord, all of that is, Rooster Brewster, okay? So you can DM it to me directly on Rooster Brewster. I have my my Discord up right now. So whether you guys want to ping me and join the VC, or if you just want to, if you just want to, just DM me your questions. That's cool. Whatever you want to do, that's cool. We actually had a couple of questions come through. We actually had one really good question come through. It was almost they put part of their life story into it, and they said it was okay for me to read it and things like that. So I'm about to, we'll get to that in kind of the middle of the show there. But anyway, guys, just a few updates. We remember on Monday we went live on gold. We have a much bigger position in those GLD call option spreads that I posted on the Discord last week. That position size in my real brokerage account, my TradFi brokerage account on Interactive Brokers, is a much larger position. But, I wanted to also play around with some perps and things like that. I use Hyperliquid and this new Trade XYZ. Remember last week, we talked about how Trade XYZ got an exclusive deal with the Standard & Poor Dow Jones publishing company, the S&P Dow Jones publishing company that indexes the S&P 500. They have an exclusive licensing deal with them. And so because of that, we were playing around with it. They have gold, they have oil. Lots of TradFi tickers on there. It's one of the most comprehensive TradFi offerings that I've seen on a crypto DEX. Basically, pretty much, you have like all of TradFi at your fingertips using like crypto guardrails, okay, with Trade XYZ. So anyway, I had a little bit of dust in some of these little wallets that I had, and I think it came out to be like $300 or something like that, and I put it all into this, and we got into gold 2 live on Monday. That position so far is still doing well. Remember guys, we already took half profit on this. This position used to be double the size on Monday, remember? But we took profit when it was around that 100% gain. When it doubled, we took half to get our principal back. Right now, everything is free and clear. And also to remember from the conversation last week, we also set a stop on the remaining half that we still have, that half long that we still have. We have a stop loss at break even. So no matter what, profit, 50% profit is guaranteed in the trade, because we already took a half, which is our principal, and then we're protecting the rest of the position with a stop loss at break even, which means if we do get stopped out from the rest of the position, we have locked in a 50% gain overall. So no matter what, we're going to make money on this trade, no matter what. So pretty much guaranteed now at this point, with the stop losses and everything in place. My stop hasn't moved yet. It's still there. I have not done anything to the position since Monday. I just like to buy right and sit tight. You know me, guys. You know me. I like to buy right and sit tight. So our gold trade is doing really well. Again, we've already made 100% profit rate on it. We already did a 2x. Now we got the remaining half as a runner. Let's see what happens. I do still think gold goes up. I still think it's going to probably go to somewhere between 4,800 and 5,000. I just have a trailing stop. So every time this thing moves up like 100, 200 point increments, I'm just going to start raising the stops. So, the next milestone will be like, if this thing can close 1 hour above 4,600, then I'm going to start raising it up to like, I'm going to start raising the stop to like 4,500. Okay. If it gets to 4,700, I'll raise it to 4,600, and then once I see that it goes through like around 4,800 or so, I may take some more chips off the table. I don't know yet. Either way, profit is guaranteed, so I'm not too worried about it right now. Let's see what happens in the markets, and we'll see. And guys, you guys already know, when I make a trade, I always alert you guys in the Discord, and I don't charge a dime for it. I've seen a lot of people ask me that. They're like, "Oh man, do you charge for the Discord?" I'm like, "Hell no, I don't charge for the Discord. What the hell does that even mean? Charge for a Discord? I don't understand anybody who charges access to like chill with them online. Like, you know what I mean? Like, what the hell does that even mean, man? But no, we do not charge for the Discord. If anybody asks you for money to join the Discord, or especially our Discord, the Key Crew Discord, the Discord that I run, hell no, that's a fraud. All right, because I don't charge a dime for that. All right, and I think it should always be free like that. I mean, yeah, we make money trading. We don't make money like nickel and diamond people, bro. But anyway, guys, that's in a nutshell. That's my plan for gold. I don't think anything will change for that. Maybe after the weekend, after the Friday close on Friday, all the commitment of trader reports come out from the CFTC. I'll take a look at it. If I see that all these hedge funds are going long and they're already positioned long, I don't know, then I might be a little bit more aggressive in profit taking. But if I see that, man, hedge funds are still like net short on gold, I mean, then let the good times roll. Let's keep on going long until we short squeeze every single one of those shorts out, So yeah, we'll see what happens. As far as like oil is concerned, we had some news come out, on Monday. Remember, on live stream, like 4 minutes after we started, we saw oil just like completely just like get decimated. And we were wondering like what the hell was going on. Remember, I was like searching the news frantically, like what the hell just happened? Because oil had dropped like $15 in like 3 minutes after we started. That was wild, right? That was wild. And actually, so, because I was live streaming, I did not know how Trump was announcing like that he sent over a peace plan to Iran. So apparently he was on CNBC. All right. So apparently he called in on a show on CNBC, which means that mofo is monitoring the market. I mean, anybody watching CNBC at 7 a.m, come on, let's be real. You're basing all your decisions off of like the reaction of the market. All right. So that's a big clue. Donald Trump really cares about what happens in the stock market. He really cares. Okay. I mean, it's evident because he calls in at 7 a.m. on that show, that Squawk Box or whatever on CNBC. And he just called in live to to debate or whatever, the host or whatever, So obviously, he's very in tune with the market's reaction. As far as like other news in Iran, I did notice that they mentioned that there is a new appointed peace negotiator for Iran. And the story, at least the story from the media, is that the peace negotiator said that there can be no negotiated peace with the U.S., or so he claims. Now, let me tell you something, man. Let me tell you something about this, all right? Why would Iran appoint a peace negotiator after Trump submits a 15-point like peace plan, basically a proposal for peace? Yeah. Days after that, they appoint a peace negotiator and go on TV to say there can be no negotiated peace. Let me tell you something. Like negotiation 101, they're interested. Iran is interested. Okay, this is how they're showing interest, right? I mean, just think about it. Think about it. Let's say you were buying a house, or let's say you were negotiating to buy something expensive, like a house. You go up to the seller and you're like, you know what, man, I'll buy. There's some problems here and there. I don't like this. I don't like that. I'll buy this property for like $500,000. And then the seller is going to come up and say, well, that's a little bit low. We got some interest in other people. Some people were, offering us something closer to the asking price. That's just a little bit too low, right? There's a counter proposal, right? Proposal, then counter proposal, right? I think that's what this is. I think we're seeing that in real time right now. We are seeing Trump made a proposal, and we are seeing Iran make a counter proposal. Okay. I think what Iran's really so Iran is interested in peace. They're just saying they're not because, again, that's just a counter proposal. This is business. That's business, right? I think they are very interested. The fact that they appointed a peace negotiator, the fact that they got on mass media to say they're not interested means they're interested. Let's be real. It means they're interested. Okay. They're interested in peace. A few days ago, right after this whole like peace plan this plan or whatever, Iran also started making deals with other countries, and apparently there are a few ships that are now trickling through the Strait of Hormuz, and apparently now what they're doing is they're charging people, they're charging ships $2 million as a fee to go through without getting attacked. Okay, they're basically charging $2 million per ship. All right. I think what Iran is really after is being able to keep charging that $2 million per cargo ship as part of their reparations. I think that's what they're after, because I think they're really just after the money. Okay, Iran is just after money. They just want to stay in power, and they want to keep making money. Okay, I think that's all really they want. So I think of course, the buyer is gonna, it's like any other negotiation. The buyer is gonna start low, the seller is gonna go high. They're gonna meet somewhere in the middle. Okay, so America sends something like, unconditional surrender, this, all this stuff. And Iran's going to say, no, we're not going to do that. And then they're going to meet somewhere in the middle, right? And I think somewhere in the middle is going to be Iran being able to charge money to let ships in, and they're going to use that as part of the reparations. They're going to be allowed to do some sort of way to extract some sort of money. All right. In return, maybe, maybe they stop aggressive tactics. Maybe they stop their uranium enrichment program, whatever, right? They're going to meet somewhere in the middle, most likely. Okay. And Trump is also on a deadline too, because if oil doesn't, some countries are already depleting their reserves, their emergency reserves in oil. So not only that, and also too, you got, some of these maritime reinsurance companies that may have to raise cash if certain areas are still designated as conflict zones. And so all of this culminates into, he's got a deadline. I'm sure the Iranians, they have their own deadline. I'm sure money's going to run out if they can't move their oil. Everybody's on a deadline. I think everybody wants a deal. Okay. Everybody wants a deal. Trump, obviously he wants a deal because this thing is not very popular here at home. And obviously I think the Iranians, because them just showing that they have appointed a peace negotiator means they're interested. They want a deal too. Okay. So it's looking like maybe we're getting close to the beginning of the end of this conflict. All right. It's starting to look like that. We're starting to see oil not really make any sustained rallies past a certain point. Oil is under that 100. I think, could it go back to 100? Maybe it could. I don't know. Nobody can tell the future, but 6 months from now, 9 months from now, I do think that we're going to see a lot lower prices. And again, is the same kind of pattern we saw back in 2022 when Russia invaded Ukraine. We saw oil go from 60s and 70s all the way up to like 120, 130 a barrel, and then 6-7 months later, we're back in the 70s again. So yeah, probably more of the same. Okay, I'm sure this is going to play out kind of this very similar way. It won't happen exactly the same way, but history does tend to rhyme. Okay. So we'll see what happens. But I think that, it's already looking like, at least on the surface, geopolitically, it looks like things are going toward that direction of de-escalation. It sounds like both parties want some sort of de-escalation. The only thing in all of this, the only thing that's not really known in all of this is Israel going to escalate this? And then there's also rumors that some of the Gulf countries, they want to escalate this too. Like Saudi Arabia wants to escalate this because they've always been at odds with Iran. Saudi Arabia and Iran have always kind of been enemies with one another. All right. And so Saudi Arabia may find this as an opportunity to redraw the map in their zone of influence. Maybe. I don't know. Is that really important for us for money maxis, for us trading? No, it's not. The only thing that I would say is that there's still risk of some headline driven movements. Big movements, just like what we saw on Monday on the live stream. When we started at 7, it was like, remember, it was like 7:04 a.m. We started seeing oil like dump like $15. We saw the S&P 500 go up 2.5% literally within minutes. So those kinds of like knee-jerk reactions could still happen. So what I'm doing in my own portfolios is I am diminishing the position sizes so that I can withstand more volatility in my trades. Okay. So let me say it again. What I'm doing is I am basically sizing down my trades. I'm making my trades smaller so that I can give myself a little bit more room on my stops so that I can eat more volatility just in case there's a headline announcement that goes against me. Okay. Because I don't want to get just chopped out just to be proven right, a week later. Right. So just things in mind, I think because of the still increased risk of these like headline situations where, Trump might get on TV and say something and the markets could do something, right? In either direction, you just don't know. Right. And so because there is a heightened risk of headline, driven market movement, I think it would behoove us. It would be prudent for us to kind of size down just a little bit, just, within the next, let's say, a couple weeks. Okay. So, so something to think about, that's one way, somebody asked me that too. They're like, how do you account for headline risk. Like, how do you manage headline risk? And I think one of the easiest ways of managing that kind of risk is to size down your positions. Size it down so that you can take a little bit more volatility against you, right? So that's just like one way I'm gonna do it. You guys can do whatever. I always say this in every show. None of this is financial advice. All this stuff. This is all education and entertainment purposes only. But that's what I'm gonna do. You can do with that as what you could take that knowledge of what I do. You can apply it to your own strategies as you see fit. Okay. But anyway, I do think that, already we're starting to see signs, at least the story is that it looks like it is de-escalating. I don't know, something could happen maybe over the weekend and it could escalate again. And if it does, we'll be ready for it. I'm not too worried about, any of our positions right now. Actually, one position that I was hoping that it would fall down more so we could buy more was Brazil. But man, Brazil is it is resilient, man. The Brazilian stock market. Shout out to Brazil, man. Shout out to Brazil. Damn, they know how to hold their market up. Let me tell you, Brazilian stock market is doing relatively well. And I was really, really hoping that this would fall a little bit more. I really was. I was like, come on, 31. It never got there. It got to 34.8, or a little bit under 35. And again, guys, we're looking for that 31, 32 to buy back in full position into our EWZ long dated call option strategy. We still got a half position, but I want a whole position. And I'm going to exercise a little bit of discipline and patience here. And I'm waiting for that 31, 32. But man, it's not coming. So I don't know. Maybe we get in the coming weeks. Maybe we get some other reason to sell off. I don't know. I don't have a crystal ball to any of this, and I keep telling you guys, trading is not about, trying to predict the future. It's about managing risk in front of uncertainty. Right. So yeah, I want this at 31, 32. It's just not pulling back. I don't know why. It's just, there's some relative strength here in Brazil. Which is good. Because we're still holding our half position, but I would have loved for this to have pulled back further to get in. Now, could it happen? Maybe. If not, oh well, we'll see. Shout out to my boy BZ. BZ's in the house. What's going on, my man? It's good to see you in the live stream, bro. I have out the money and video calls with IVR of 2 for the right tail risk. Ha ha! You have out the money. Okay. All right. So BZ. So we got a range of community members here at the Key Crew. BZ is one of our OGs from the previous community that came over and everything like that. Shout out to the Checkmate crew. And he's very, very advanced when it comes to options trading. He's one of our more advanced members. And what he's talking about is out the money call options. So basically super, super bullish bets that, the Nvidia would have to moon in order for him to make money. But if it does, he's going to make a lot of money. Okay. So what he's talking about is that tail end risk. What if everything good happens? What if there's peace immediately? And what if the markets just start running to the upside? So he has those out the money Nvidia call options just in case if we have peace overnight. I like your style, BZ. I like your style. Actually, let's actually take a look at that. Even just because he mentioned it, let's actually take a look at that. I just want to know what that would even look like. I'm actually going to go to, I'm going to go to my IBKR and just take a look and see what he's looking at. NVIDIA. So do you, BZ, if you're watching this right now, I saw your comment on YouTube. What dates and strikes are you in? If you want to let me know what dates and strikes you're in, let's take a look and see, man. Maybe I joined that lottery ticket with you, bro. Because in the end, those out the money calls, that are IVR of 2 and all that, those are lottery tickets, right? And if those lottery tickets are cheap enough, man, I'll play with you. I'll play with you on that. I'll cluck around. I'll cluck around with you, man. All right, I'll cluck around and find out. If it were me, let's actually also take a look at the IV structure of NVIDIA. Let me see here. NVIDIA, for those that don't know, NVIDIA is the company that makes those graphic cards for, video games, machine learning, AI, all those, the GPUs to run all those models. 200 calls, 51-day 200 calls. Whoa, 51 days. That's 51 days would be, 30 days would be April, May. So May monthlies. You're in the May monthlies. That's the orange line. Okay. That's not so bad. The implied volatility is not too bad. Mays. Let me look at the Mays. Dang. I might have to jump in with you on this, homie. I might have to jump in with you on this. 200 calls. The 200 calls at 241. So right now, is NVIDIA going to gap down? Or I think it's going to gap down because of the market being the way it is today, right? Yeah, so 178. So yesterday when it was closed at 178.68, the 200 calls were around like $2.42, $2.43, somewhere between 241 and 244 right here. So what? Each contract $240 something dollars. And you're in a Delta 20. Okay. So most likely when we open the market today, we're going to probably be a little bit lower. So what? What are we going to be at? Like, we'll be in the lower twos. Okay. I mean, 50 days for me for a Delta 20, that's like a little... that's a little degen for me, man. That's a little exotic for my taste, okay? My man BZ is like, I want that risk. I want to cluck around and find out, But man, to me, that's a little bit exotic. That's a little bit too near dated. That delta is a little bit low for 50 days, just for my taste. Now, if you're ready for that risk, then that's on you. But that's a little exotic for me. For 50 days, if I were betting on, if I were a betting man and I were betting on NVIDIA for 50 days, I would do a call spread. You know me, I'd probably use a call spread. But yeah, just be mindful of time decay, because you are paying about 0.067 theta, which means like what? That's like 2 to 3% a day that you're losing. Whew. You're losing like 2 to 3% a day if the price is flat. Okay, so if price doesn't even move against you, if Vega doesn't even move against you, you're losing about 2 or 3% a day. Just if everything just stays like constant. Okay, if only thing that happens is like the day changes. Yeah, so just keep that in mind. That's the math that you're playing with. That is an interesting play. Actually, if I were to get a lottery ticket, hold on, man. So what is it? We're in January, March of 2026. So 2027, like June 2020. If I were a gambling man, I'd be looking at one of these right here. Yeah, I'd be looking at one of these. Yeah, maybe like the 400 calls for like June 2027 gives me about a year and a quarter. If I were looking for lottery tickets, this is the type of lottery ticket that I'd be looking at. Why would I go that far out? The reason why I go that far out is because what I really want to do is minimize my theta. I want to give it time, because what if it consolidates for a little bit and then it moves up, right? So that's why for me, if I wanted to buy lottery tickets, if I wanted to buy that like far right, like tail end risk, so basically the tail end of like going all the way up to the right. So that's like, a mega rally. I'd want something that's dated a little bit over a year. Because also too, like options pricing models tend to underprice volatility in the long term, especially on call options on equities. So that's a little bit very technical. That's a little bit mathy, but yeah, I would want to look at something that if I were gambling on lottery tickets for that right end, like tail risk, everything mega rallying, I'd be looking at one of these options, like the June 2027 or further, Delta 12 to 8, kind of that zone. And right now, those 400 calls, I mean, they're around the same. I mean, you're spending like $240 something per contract. This is very similar, like $315 to $330 a contract. Ain't that bad, and it gives you a lot less theta. So I'm paying a lot less. I'm paying 1/3% per day on theta rather than 2 or 3% per day, right? So it gives me a little bit more. I mean, now obviously I get less delta too, but if you're really worried about that tail end risk of it rallying hard, I mean, it's not just going to rally for one day and stop. You know what I mean? It's going to keep going, right? So that's where you're going to get your money. You're going to get your money on the Vega expansion on the long side of that, on the time curve. So anyway, it got a little bit technical there. I know most people aren't there, but BZ, I know you understand that. So that's why I wanted to go over that. But yeah, if I were a gambling man, if I wanted some lottery tickets on Nvidia, that's how I would play it. But that's just me. IV percent, where's that? Oh man, 52-week IV percentile is not bad right now. It's at 13%. So IV percentile, for those that don't know, and just a little quick options lesson, IV percentile pretty much tells you, like, in the last 52 weeks, what is the percentage of time that implied volatility was higher than where it is right now. So that means in the last 52 weeks, if IV percentile is at 13%, it means that only in the last 52 weeks, only 13% of the time was implied volatility priced higher than right now, which means option prices are generally cheap. That's what it's saying. That's what it's saying, that the NVIDIA option is generally cheap. Now, this could be, I just realized I'm in pre-market right now. We're 2 hours before the market opens, and I know sometimes interactive brokers kind of gives a wonky value during pre-market because it's basically taking like yesterday's calculation with today's prices, and sometimes they can give you a really weird calculation. So I wouldn't trust any of these numbers until the market opens. Once the market opens, everything refreshes and everything gets recalculated and everything like that. So maybe I shouldn't go off of that. But if that is true, if the 52-week IV percentile is that low, man, that ain't bad, man. It ain't actually not a bad time to start like looking at those kind of lottery tickets on the upside. Maybe it's the time to do that. Anyways, I mean, there's always a trade going on, so I'm not too worried about missing out. If we do get a mega rally, Brazil is going to do extremely well. Again, that's my like biggest conviction play right now is Brazil. Mexico would be part of that if I was in Mexico. We were trying to get into Mexico last year, into EWW, which is the Mexico ETF, but we never got a pullback that was big enough to get in there. So Mexico too is also has relative strength right now when it comes to global markets. If you look at global stock markets, Korea is doing really well too. I'm actually very surprised that South Korea is doing really well. I don't know that much about the South Korean stock market, but I know it's very, very concentrated in very few companies. Some of these Asian countries are like that, where there's like these really, really big companies that take up like a big percentage of the GDP. I know Taiwan is like that, TSMC, Taiwan semiconductor manufacturing is like a huge percentage of the GDP of Taiwan. In Korea, it's like Samsung, LG, SK. Those like big conglomerates take up a huge percentage of the national GDP. So I'm actually very surprised. And actually, what's really, really surprising too? On Trade XYZ, one of the offerings that they have is a Korean ETF. Like, out of all the international markets, I mean, obviously US, right? Everybody trades the US. S&P 500 is like the benchmark when it comes to risk assets. But I was just very surprised that out of all these international markets, they chose to use like Korea. I think they also have Japan in there as well too. Is EWI? Yeah, EWI is the Korea ETF. So apparently this is like one of the top performing stock markets right now. I mean, whatever. I mean, I'm not going to jump on it just because of the hype, but for me, I think in the next year or two, the real winners are going to be Brazil and Mexico. Okay. And by the way, Brazil and Mexico both export energy. So there's that too. There's a little bit of extra icing on the cake if energy prices do stay higher for longer. But man, oh man, I mean, even on this pullback, I was like, oh man, if Mexico pulls back to like, low 60s, that would be juicy AF. That would be like, oh my God, I'd be like, I'm ready to get in on that. But man, it didn't even do that. It didn't even do that, man. It just like literally got to this shallow support and just bounced off of it. Because again, I think the word is out. I think it's not just us, everybody, like big institutional money, everybody's looking at these kind of countries. Mexico, Brazil, again, those two are like the countries where I'm most bullish on. Luckily, we did get into Brazil last year. We just bought right and sit tight, buy right and sit tight. I swear more money is made on buying right and sitting tight than anything else. I don't care what you say. Every active trader I've said, okay, bring me verified statements, bring me verified transactions, and all of a sudden it's crickets, right? And it's because it's really hard. If you trade every day actively like that, chances are you're gonna get whiplash by the market. You're gonna face days where you get massive drawdowns. I don't like that. I just like stress-free trading, which is like buy right, sit tight. Actually, there was a really, really good quote on X by Peter Brandt. I don't know if you guys know who Peter Brandt is. Peter Brandt is this like trader. He's like probably in his I want to say he's like in his 70s. He used to be a floor trader. I don't agree with everything Peter Brandt says. Peter Brandt is like this chartist. I know we got a community member, MSC. He really, really likes Peter Brandt. I respect Peter Brandt. Let me put it that way. Out of all the financial Twitter guys, he's like one of the more reasonable guys. He's like really, really reasonable. All right. But he actually had a really good thing here. Where is it? He actually had a really good post the other day. And I was like, man, that hit home. And I actually was like gonna here it is. Let me actually, you know what, man? I'll retweet it on my thing so you guys can see it on my timeline. But yeah, man, I think this is a great quote right here. He said, so let me read this to you. Trading frequency, all right? Trading frequency, actually, I'll give you guys a full screen here. There you go. So you can see. So, okay. So here, look at here. It says trading frequency, a commentary from 5-decade veteran. All right. I follow about 40 global futures markets, says Peter Brandt. I enter each year figuring that I might have 3 good signals in a given market over the course of 12 months, maybe 4. That's it. For a given market, there will only be 3 or 4 price bars that I will consider suitable for taking a risk position. If I trade a market more than 5 times in a year, I consider that I over traded. Let me read that part again. If I trade a market more than 5 times in a year, I consider that I over traded. That my nose was too close to the chart. Then it is time to be conscious about pulling back from daily charts and refocusing on weekly charts. As a rule, if I cannot see a pattern on a weekly chart, then it is 80% certain there is no trade for me. That's it. 3 or 4 price bars that are important. The rest are noise. I love that philosophy. Over trading. I really do think most people, the reason why they end up failing in investing or failing at trading is because they overtrade. Okay. I think 80% of trading is sitting on your hands and waiting. If you can't sit on your hands and wait for 80% of the time, trading ain't going to be for you. That type of patience and discipline is what you need. Okay. Now, I'm not talking about for some of you guys that are like very advanced, like you're covered call writers, your option sellers, your theta gang, like theta gang, all those guys, yeah, that's not, you can do daily management, but that's not day trading. What you're doing is you're just making sure and just doing daily hedging just in case so that your options position doesn't go against you, right? But you're not getting in and out of new trades and new tickers every day, every hour. It's not like that, right? So context matters. That context matters, and again, if you're not in the theta game, if you're not an option seller, if you're not a cover call writer, don't worry about it. That's a little bit more advanced, but I think this is very, very true. For the most part, this is very, very true. Most people overtrade. All right. And I think so too. Like, you know, the at most, like when you're talking about big swing positions, yeah, 3 or 4 trades a year per market sounds about right. That sounds about right. I know a guy, again, the person that I know who's like the best trader that I know, who verified it and that showed me their brokerage account and everything. That guy, he only trades 2 markets. He trades the VIX and Japanese equities, okay? Like the Nikkei. So he trades the Nikkei and the VIX futures. And he makes like an average of 3 or 4 trades a year combined. And that's it. And he averages like almost like double his money every year. He doubles his money every year. And he's been doing that for over like a decade. Okay. That's like the best trader that I know. And all he does is he just waits. He waits. Actually, he plays a lot of video games. That's what you know how like when I first started this live stream, I started playing like Fortnite a lot, you know, because the markets were shit. Yeah, I learned that from him. He plays video games while he waits for his price levels. Like he just sits there and playing video games, and he has a little screen up for alerts. And if he gets an alert, like, you know, for his 3 or 4 times a year trade, he takes it. But in the meantime, he's just playing video games all day. You know, that's all he does, right? So, you know, whatever it is, I'm not condoning playing video games or something like that. Like if that's not your thing, you don't have to do that. But I'm just saying, like, the point of that is like, for trading, for capital deployment, you have to have that type of patience where you know that 80% of the time you're going to be sitting on your hands, okay? But anyway, shout out to Peter Brand. This was one of the more well-written tweets that I've seen. Of course, a lot of people are just going to read this and going to be like, that's boring. You know, what's exciting is like getting in and out every 1 minute candle. That mofo is going to get wrecked. Whoever says that kind of shit is going to get wrecked, okay? That's just not how it works. The most profitable traders are the ones who say no to 80% of the ideas that come across their way. They really hone in on that 10, 20%, those top signals, and they lean into it and they wait for that edge and they're disciplined about it. That is a true trader. That's a true profitable trader. Okay. So anyway, I thought I'd share that with you guys. It's not about trade frequency. Okay. It's really waiting for your edge to appear. And right now the edge, well, I think when it comes to like macro forces, is Brazil and Mexico. Man, ain't no more edge than that for the next year or two. I'm telling you guys, Brazil and Mexico. And you motherfuckers, a lot of you guys were making fun of me last year, like, because I hang out with a lot of crypto bros, you know, and last year I was on a lot of spaces. I hosted my own spaces. We were hosting spaces almost every day last year. And the year before that. So a lot of crypto bros, a lot of the crypto bros were making fun of me like, oh man, you're getting into some boring trad fuck, little bit, man. Yeah. Well, hey, you know what? Like, Brazil has outperformed your ETH, your Solana, Bitcoin, everything, man. Brazil and Mexico have outperformed all those assets. Okay, it's outperformed the S&P 500, outperformed crypto, all that stuff. You can't fight macro forces, man. Like, and I was trying to tell people that. I was trying to tell people, like, long term, I'm bullish on crypto, and yeah, I'm long term DCAing Bitcoin and all that. But for the next year or two, the macro forces are not there for this. Like, you know, there's going to be volatility. There's going to be times when prices come down, and that's why I said, hey, raise cash. That's why I was telling people, raise cash, get some Brazil and Mexico, but also raise some cash because we're going to see lower prices, and you're going to want to buy some of that dip. Well, when the dip's being passed around, you know who got chips and who don't. When the dip's being passed around, that's for damn sure, right? You hanging out with your homies, you know, at the crib, you know, everybody's sitting on the couch, you passing that dip around, and this mofo, it has no chips, so he doing the 2-finger scoop on that dip, you know, that nasty mofo, right? So, you know, we know who got chips and who don't. You know, when the dip's going around, man. So anyway, this is why I told everybody, hey, you know, have chips for that dip. But Yeah, I mean, we have chips for the dip, and we got more chips for more dip. And I was hoping that Brazil would dip more, but it didn't. You know, through this Iran war thing, man, Brazil just almost didn't give a fuck, man. Like, and this is nothing for Brazil, man. I mean, look, like in Brazil's got even in bullish years, man, they got these wicked pullbacks, man. Like, I didn't see that wicked pullback. Like, even I used 2007 a lot as an example, but man, 2007 Brazil ETF did positive 70, 80%. But in that summer of 2007, it went down 30, 40% in that summer. You know, that's the type of dip I was looking for. But we didn't get that. You know, I thought, ooh, maybe this war might be an excuse for Brazil to sell off. Nope. And actually, if anything else, man, we saw actually when I saw the transaction reports and when I saw the ticker tape, I actually saw a huge amount of volume coming into Brazil ETF, which means, yeah, institutions probably know. I mean, if I know, everybody knows. I mean, I'm not the smartest guy in the world. So if someone like me knows, and that means these guys that are paid to know, and they're in the institution where, they got a whole army of analysts crunching numbers for them and all this stuff, of course they're going to know. Okay, of course they're going to know, right? So, yeah, man, I mean, I really hope something happens. I don't know, some credit scare or whatever. I mean, this war scare, I don't think the war is going to do it, but speaking of credit, remember how we talked about that one credit indicator, LQD over IEF, the corporate bond ETF divided by the 10-year treasury ETF? Well, there it is. So actually what happened was we closed above it. That line, remember I said this line is very, very important, this level right here? So on Tuesday, we closed above it, all right? We gapped up over it yesterday, Wednesday, but then we closed under it again. So today and tomorrow is going to be very, very telling. If this LQD IEF chart still keeps going down today and tomorrow and closes below here on Friday, and also, it continues going down next week, we could see a lot more volatility end of next week into the week after that. So next week or next week or two. Yeah. For the next week or two, we could see more volatility. This could be the clue for that. LQD over IEF. Again, this is the ratio of corporate bonds divided by the 10-year treasury bond. It gives you the risk sentiment in private credit. All right. For corporate debt. Okay. So if it's going down, if this chart is going down, that means it's risk off. That means everybody thinks corporate debt is risky compared to the government debt. So they're like, ooh, it's risky, risk off. Ooh, I don't want to touch that, right? When it's going up, it means, let's get paid because the risks aren't out there. It's risk on, yeah? So when this is going up, when this chart LQD over IEF, when it's going up, it's risk on. When it's going down, it's risk off, yeah? So right now, this level is very, very important. This is the indicator that I'm looking at just to see what flavor of market we're going to get overall. Another indicator, the secondary indicator that I'm also looking at is that backwardation of the VIX futures contract. We went over this last week or the week prior, what this means. Basically, it's the front month VIX contract minus the back end VIX contract. So VIX, as a refresher, VIX is the volatility index. It tells you how expensive portfolio insurance is. If there's a lot of uncertainty out there, that means portfolio insurance is in higher demand because there's more uncertainty out there. I demand more insurance on my portfolio to protect myself. Therefore, portfolio insurance prices, the premiums on the option prices are higher, right? That's what this means. So VIX front month future means if this is the case where the front month is greater than the back month, where this is a positive number with front month minus back month, when it's a positive number and going up, it means there's more increased uncertainty in the short term. Usually COVID, times of war, geopolitical events, it usually causes this, yeah? Or some type of bank failure, black swan events. Black swan events cause positive numbers in front month minus back month on the VIX futures contract, and it drives up that short-term VIX futures contract. So long story short, okay, what does all this mean? Enough of that jargon. If you see this chart and it's going up and it's above zero, it means that there's still a lot of uncertainty in the short term that the market has not digested yet. We are still going up on this, okay? It has not curved down yet. Okay? So it's not curved down yet. As a reminder for you guys, generally bear market rallies are the most vicious rallies. I'm not saying this is a bear market because we don't know. We don't know. It's not like you know ahead of time usually. No. Bear markets are very, very notoriously hard to call. You usually know after you've been in it for a while, okay? But bear market rallies are the most vicious rallies. The last bear market we had was back in 2022. Remember? The rate tightening bear market. So in that bear market, we saw markets come down over 20% from oops, that is not it. That's 2025 here. Oh, this one right here. So in 2022, this rate tightening bear market, we saw from December 2021 all the way to summer, we went down about 27%. We went down 27%. That was a 27% down movement in like 6, 7, 8 months. Yeah. But in that downtrend, in that downward movement, okay, we had these bear market rallies. Some of these rallies were like over 10%. Like here, back in March, we had a bear market rally that was over 10%. Right here, we also had another bear market rally. Bear market rally from here to here. From what is this? What date is this? June, right? Yeah, from June to August. Yeah, from June to August, we had an 18% rally in the S&P 500 just for it to close lower the month after. Right? So from top to bottom, we did minus 27%, but in between, we had plus 10, almost plus 20% rallies in between. Bear market rallies are the most vicious rallies. There is a reason why most bearish traders get liquidated during bear markets. The reason why why do bearish traders get liquidated during bear markets is because they get chopped out, they get liquidated during a bear market rally. Bear market rallies are the most vicious rallies because bear markets and risk assets are low liquidity markets. And when there's low liquidity, prices can move faster. Okay? Prices move faster when there is less liquidity, right? Liquidity means there's a lot of order flow. If there's a lot of orders, buying and selling, it's harder to move that price out of a certain range. Whereas if there's no orders, well, then it doesn't take a lot of orders on the other side to move the price. If nobody's selling, right? If nobody's selling, it takes very few buyers to push up the price, right? If there's a lower liquidity means there's lower order flow, right? So that's why generally in like a bear market during like for the S&P 500 or for crypto or anything like that, for risk assets, whenever we're in a bear market, those rallies in those bear markets tend to be very intense because the order flow is light. And when there's light order flow, prices can get pushed out of ranges much easier. Okay. So just keep that in mind as you manage your risk in this market. We could be, I'm not saying we could be in the beginnings of a bear market right now. I remember back in 2022 when I was saying this in March, April, when I was like, ooh, this could be a bear market. This could be a bear market rally, guys. I remember everybody was laughing at me. They were like, markets are up only, blah, 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 blah. They're up only usually, but not all the time. All right. You know, that's the thing about trading and speculating. All it takes is one bad move and you're wiped out. All right. Always have an open mind. Yes, generally markets go up over long periods of time, but on a day-to-day basis, on a month-to-month, week-to-week basis, on a very micro time scale, you just never know. You never know. Okay. So we could be, okay. I'm not trying to predict the future. I'm just planning ahead and just looking at all the angles, but we could be in the starts of a bear market right now. You don't know that. Now, if we bounce and we get new highs, then yeah, then we're not in a bear market, right? But if this continues lower, it could be, right? And if it is, then that means that we should expect some wicked bounces in between. Because again, Bear market means low liquidity market in risk assets, which means we could see counter trend movements that are outsized, i.e. bear market rallies. Bear market rallies are very, very wicked rallies, okay? Very short-lived, very, very fast. It chops everybody out, and then it continues the trend, okay? So something to think about. Something to think about and to have in your mind. Again, risk management is first, second, and third. Protect your capital, protect everything, all that good stuff. All the things that I say all the time. Always protect your money, you know, that's the most important thing. All right, so that's cool. That's cool. Let's get to some of these questions. I got a question from one of our community members. And one of our community members wrote something and they DM'd it to me. So I have it on my phone. So I'm going to read it from my phone because that's the easiest way to read my DM. So I'm going to read this question. Okay. So this is from one of our, I just had it here. What the hell happened? Damn. It was on X too. Hold on. Let me refind it. Dang. It was a good one too. It was a good one. Give me 1 second, guys. I just had it on here. Here we go. Okay, this guy DM'd it to me. Thank you for this DM, by the way. So let me read it. Okay, this is from one of our community members. This is their question. He goes, I am a simpleton engineer in my 30s who just gets a paycheck. I pay my bills. I stash the extras, whatever I have in my checking account. I go to Fidelity maybe every other month and put those on SPY and forget about it. For those that don't know, SPY is the SPY. It's the S&P 500 index fund. We talked about this last week. You know, I was like, oh, if you want a good way to start is getting into the S&P 500 index fund. So apparently this guy, he goes to Fidelity every other month and he buys into the S&P 500 index fund, okay? So back to his message. Now that the world is changing, it seems like my job will disappear from the face of the earth because of AI, and decided to at least learn about how finances work. Like, what the fuck does it mean the Fed lowers rates? What's that gonna do to my stock portfolio? The price of eggs at HEB, yes, I am in Texas, and gas price. I have tried surfing around, went to Investopedia, and read up on things. I am reading, but it doesn't register. I don't see the big picture and how this money works. Despite all this, I'm a bit too embarrassed to go to some financial advisor at Fidelity and ask how tariffs affect my life. I know it's their job and pretty sure they don't mind telling me. Is it just me? How do you guys learn how things work? What is happening out there? And how does it impact your wallet? All right, very good question. Lots of questions, lots of things here. Let's go over it, okay? So I'm going to go through the bullet points of all your individual questions, and then I'm going to address like the overarching theme of what you just wrote, all right? The first question you had was, what does it mean when the Fed lowers interest rates? Okay, so that's a very, very good question. A lot of people are very misinformed when it comes to the Federal Reserve, which is our central bank here in the US, and what they actually do, and what it means to actually lower interest rates. A lot of people wrongly think that what the Fed does is go out there and they reduce the 10-year Treasury bond. They buy bonds and they bring down the 10-year Treasury yield. Or they go to the banks and they tell them, oh, lower your interest rate. That's not what happens. That is not what happens, okay? The 10-year Treasury yield, the yield that we talk about here on Money Maxxi, is a market. It's set by market forces. The people who buy and sell Treasury bonds set the 10-year yield. The Federal Reserve has no control over long-term interest rates. What they do have control over is very short-term interest rates. Specifically, the Fed funds rate. The Fed funds rate, okay? When CNBC, when all these media pundits, when they're talking about the Fed is lowering interest rates or the Fed is raising interest rates, what they're really talking about is lowering and raising the Fed funds rate. The Fed funds rate is an overnight borrowing rate of member banks at the Federal Reserve desk. Okay, it's an overnight funding rate. So banks are always required to have excess capital and cash on hand to meet the demands of their depositors. Okay, so by law, if you're a U.S. bank, all right, you have to have a certain amount of reserves and capital ready on hand. Okay, if for whatever reason at the end of the day you are a little bit under, all right, or you need a little bit more capital, you can go to the Federal Reserve, you can go to the Fed funds desk, the Federal Reserve desk, and borrow money from the Federal Reserve when you're a bank, okay? The rate that the bank borrows money from the Federal Reserve desk is the Fed funds rate. It's the overnight borrowing rate of banks, okay? That's what they're raising and lowering. They're not raising and lowering your savings account rate, your credit card rate, your mortgage rate, your 10-year treasury bond rate. They're not doing that. They have no control over that. Okay? They have no control over that. All they have control over, all they do set is something called the Fed funds rate. It's the overnight borrowing rate for banks at the Federal Reserve desk. Okay? That's it. All right? Everybody thinks like the Federal Reserve is this all quasi-powerful wizardry, and they set prices for everything in my life, and all this stuff. No, that's not how it works. That's not how it works. Okay, so all that Fed bashing, all that like, we got to get rid of the Federal Reserve. Usually people that say that have no idea how modern economics works. Okay, like stay away from people like that. Okay. It is just, they set something called the Fed funds rate, and that's what they're talking about. It's now, how does that affect you when the Federal Reserve sets all this? So the more expensive they make this, okay? So if they raise the Fed funds rate, that means that banks have to be, they have to be more selective in what they use their capital for. So it creates a tightening effect. Right? So basically what they're doing is they're making capital more expensive to those that distribute capital to the rest of the economy, to banks. So when the banks see that it is more expensive to borrow overnight, they're going to be more selective in how they use credit. It starts tightening the system. Okay? So it makes credit less prevalent, less spread out, which means it's a tightening condition, which controls inflation. That's one way they use to control inflation, to control that velocity of money. Okay, they're trying to slow things down. Right? They're slowing things down by raising the overnight borrowing rate from banks. And that causes banks to be more selective in how they lend out too. Again, that creates that tightening effect. And that's one of the tools that the Federal Reserve uses to fight inflation. Okay, so generally when they start raising interest rates like this, what they're wanting is for people to slow down that velocity of money so that prices can come back to a more controlled inflation rate. Okay, because when inflation is out of control, when prices start just going up like 9, 10, when we start seeing like hyperinflation, that's usually when that can lead to societal collapse. All right, that can lead to societal collapse. I mean, inflation was one of the reasons why Rome fell. Right. So one of the mandates of the Federal Reserve is to fight inflation. Okay, so that's one of the tools they use is by raising and lowering the Fed funds rate. Okay, so that's your first question. Second, what's that going to do to my stock portfolio? Okay, so what does that do to what does a rising interest rate mean for your stock portfolio? Generally, when interest rates go up, all right, when interest rates go up, it favors certain stocks over others. Okay, when interest rates are low, okay, when interest rates are low, when deposit rates are low, investors tend to look for growth well into the future. They're looking for assets that will grow faster because there's no yield, right? When interest rates are low, there's no yield. So they look for future growth. So when interest rates are low, generally like your industries like tech, fast growth markets tend to do very well. All right. When interest rates are higher, the cost of money is higher, right? Because the cost of borrowing is higher. Therefore, investors prefer revenue now rather than more revenue later. They're looking for value, okay? They're looking for income now, all right? So that's the biggest difference. So generally in a rising interest rate environment, your industrials, your banks, these kinds of stocks will do better. In a low interest rate environment, your growth stocks will do better, like your tech, things like that. So that is how it affects your portfolio. There are instances where this is also very different. These are usual market conditions. Now, when the interest rates are dropping fast because there is like, there's like an economic recession or something like that, then yeah, nothing is going to save you. Okay, if we're in a recession, if we're in a really bad recession and the Federal Reserve is cutting interest rates and interest rates are coming down and they're near zero, like kind of what happened in 2008. Yeah, I mean, still things are going to fall, right? I'm just talking about these are usual patterns. Now, if there's something else going on in the economy, something like that, the rules change. Okay, so what I'm talking about is very general. It's very general and it's what usually happens. Okay, so just FYI. Okay, so what else? Do you have other questions in here as well? Is it just me? How do you guys learn about how things work? So with anything, it's practice, right? Now I said this last time too. It's like imagine you're just starting out, your first day on the job, and you're a builder, right? You're a home builder, right? Are you going to know everything about home building? Are you going to know exactly what every tool does? Are you going to know exactly what every like terminology is? No, right? What you're going to do is you're going to start working. You're going to maybe shadow somebody and you're going to just like keep working at it, keep learning as you're doing. And then maybe a couple months later, it becomes second nature. You're talking like the other guys at the work site, right? You know now what the tools do. You know now all the terminologies because you've been around it now for a couple months, right? It's the same thing. I think anything in life, trading, investing, building a house, learning how to play a game, this, that. When you're new, it's all overwhelming. But as you keep at it, as you practice, you get better and better. One of the things that I've been practicing recently, and you guys have seen, is my Fortnite skills. When I first started Fortnite, man, I couldn't even move the mouse. I got dizzy moving the mouse, like when I was aiming, right? I didn't even know how to reload, right? And now look at me now, right? I mean, I'm still bad, but I'm not as bad as I was in day one. When I played Fortnite, I had no idea what a storm was. I was like, or what building a wall meant. Like, I had no idea what that meant. Like, what's a storm? I'm like, what storm? I didn't even know what it was. But now I know what it means, right? Because I've been around it. Same thing with trading, terminologies, all of this. The more exposure you get, the more you're going to pick up on things. So stick with it. I'm going to be here every Monday and Thursday, and I'm in the Discord almost every day. Yeah. Come through, talk to us, learn with us. Yeah. That's what it's all about. And the beauty about trading and investing is that it's a game that never ends. It's truly a lifetime of learning. It's something that you could do and get better at every year of your life until the very end. It's just one of those things. And I think it's a very, very beautiful game. It is. It's one of the most beautiful games in the world, the financial markets. It's something that it's a lifelong of learning. It's something that I can study and be a student of for the rest of my life. And that's one of the appeals for trading and investing for me, at least. Yeah. So I don't know everything about it either. There's nobody knows that everything about it too. I mean, I know some guys that used to be on the floor of the exchanges. They spent like 20, 30, 40 years on the floors of the exchange. And they tell me the same thing. Every day they learn something new about the markets too. Every day the markets change, the markets evolve. So they have to keep learning as well too. So it's a lifetime of learning. So be proud that you're taking the first steps in learning and stick with it, man. And your boy Rooster will be here here, supporting you along the way. What's up, Willow? It's good to see you, Willow. Good to see that you dropped by in the on the YouTube. Thanks for joining in. If you got any questions, if you want to ask some finance, if you want to talk some trade, let me know, Willow. But it's good to see you as well. All right, so let's go back to the question that our community member asked. So he's talking about all these things. He's saying, that he's an engineer. He's been putting some money away. He's trying to learn these financial topics, all of this stuff. AI is going to replace him. I think what this guy said, I think it resonates a lot with a lot of young people. All right. A lot of young people probably feel the same way. They feel like, that opportunities are not as abundant as like their parents or their grandparents' generation. It used to be that, they were always told to go to school, get a degree, do well in school, get a good job, and you're going to be fine in life. And I think a lot of young people are figuring out that that is not true in our world anymore. All right, that's not true anymore. And remember, I said, guys, if you're a young person, you should really learn how to trade because you need to generate alpha. You need to generate some returns above what the market does. Remember, we went through this whole thing. And actually, I promised you guys this week that I would drop that video with the retirement calculator. I still haven't done that yet. I'm almost done. I promise. This weekend. Yeah, this weekend I will. Okay. I just wanted to make sure it was right and everything. I'm a perfectionist. I should probably just release the video, but oh man, I didn't like that word choice. Let me re-record that. Blah, blah, blah. You know me. I'm trying to make things perfect. It's still gonna be a shitty video by the time I publish it. So I don't know why I'm taking so long for it, but bear with me. I will publish that video, okay? And it's gonna have all the things we talked about from before. Why you should generate alpha. What does that even mean? What does that mean in a 5-year period? What does that mean in a 30-year period? All this stuff. And I'm gonna put the link to this spreadsheet so you guys can use it on your own as well too, okay? So all that stuff. But anyway, remember a week ago or 2 weeks ago, I said if you're in your 20s and 30s, even up to your 40s, if you're mid 40s or younger, you really need to learn how to trade and invest. I think everybody should learn how to trade and invest. Even if you're 70, 80, 90 years old, I think you should. But especially if you're in your mid 40s and younger. And remember, we proved that with math. It's because you have so much time ahead of you. You have so much time ahead of you that extra alpha generation, that extra return is going to mean a lot for you. Okay? And so this is why I said, if you're under mid 40s, you should learn how to trade. You should learn how to invest. You should learn how to generate alpha, that extra return over, average market returns. You should be doing that. Okay? And so, I commend you. I'm going to call you Mr. Engineer. I don't want to tell people because you're DMing me, I'm guessing you want to keep your identity kind of secret. So I'm going to call you Mr. Engineer. So Mr. Engineer, thank you for this message. I think this was a really, really good message. And the reason why I say it is good is because I think this message really resonates with a lot of people that are watching this right now. A lot of young people. I looked at my YouTube demographics and all that. Most people that are watching me are in their late 20s to early 30s, okay? And I think this really resonates with that generation, with that crowd. They're working at these jobs. You said you're a software engineer, which probably means you went to school, you got a degree, and all of a sudden now, and you used to get paid a lot. So software engineers, even 5-6 years ago, you were probably paid like $150,000 to $200,000 a year. If you're working for one of these big tech companies, all right. And now AI is like taking over, and you're getting laid off, whatever, and you're just like, fuck, what do I do? And you're trying to figure out what to do with the rest of your life, right? And the thing is, we're not in our generation, we're not even halfway. We're not even halfway there. Like, people in our generation are going to live to 80s and 90s. We're in our 30s or whatever, or 20s and 30s. Some of us are not even a quarter of the way there. So what are you going to do for the rest of your life, right? And so that I think it really resonates. This message, the way you crafted this message, I think it really resonates with a lot of people that are watching this right now, a lot of young people, right? And so, yeah, and this is exactly why you want to learn about these things, because again, it gives you something to do, something to learn. It gives you like some goals. It gives you a purpose, and also it helps you for financial freedom. I don't know about you, man, but my life is not defined by like my career. Okay. And I think a lot of young people are in that camp where you are you as a human being. You're not just an engineer. Your whole identity doesn't revolve around your career. Okay. And like, you want more out of life than just a career, right? And I think financial freedom is that. A lot of people enjoy doing things outside of work and outside of, they want to accomplish things that are not necessarily like just professionally driven, right? But if you want to live that kind of lifestyle, you need money, right? How you gonna like support yourself with that, right? So again, like, you don't have to be a trader or an investor to be like a stock jockey like me, all right? You don't have to be like that. You can trade and invest so that you can have financial freedom, so that you don't have to work at a desk 9 to 5 every day, and you can do whatever you want to do, right? And that's what I do it for. I invest and trade for financial freedom. That's why I hate day trading. That's why I hate sitting in front of my screen all day, getting abused by 1 minute candles, because it's like I'm just replacing one grueling form of work for another. Because it is, day trading is a very grueling. It's like manual labor. It is. It's like you're stuck to a desk. You're looking at 1 minute candles, and day to day, your P&L is based on how well you do on a day-to-day basis. I don't like that. I like to look at longer term trends. I like to buy right and sit tight and make money that way. And guess what? Most people will end up making more money doing that than day trading. All right. There's no professional that does that. I mean, you could look at like some of the greatest investors ever, like Stanley Druckenmiller. You think that dude like sits on his computer all day with his hedge fund money and just like sits there and buys and sells 1 minute candles? No, he doesn't. No, he doesn't. He makes trades like, a couple times a quarter. Yeah. Warren Buffett, you think he made billions of dollars day trading? No. He talks about, hey, if you're not willing to buy a stock as a business, if you're not willing to invest in that business for 15, 20 years, then don't buy it. That's his message. Yeah. So I think, there are opportunities. You don't have to be a day trader. You don't have to be all like that. And I actually think day trading is going to lead most people to lose money rather than make money. And I think the strategic approach of looking at macro trends, I think that's a much better way of trading and investing and achieving financial freedom than any other type of trading. In my view, that's my view. Okay, that's my view. All right, and I'm gonna show you why. And the results speak for themselves. For some of you guys who bought Brazil with me, you guys know what's up. You guys know what's up. I mean, we did this from before. For some of you guys from the Checkmate crew from before, you guys know we did this. We did this for uranium. We did this for S&P 500. We did this on the NASDAQ. We did this on the small caps. We did this in shipping companies. I mean, we've done these kind of like multi-month, year-long swings and year-long positions before, and we've made a boatload of money together. Yeah. And so, and some of you privately have said, yeah, I made more money doing this like 6 month, 1 year, holding than I have day trading, because, and if you do it right, and if you use the type of tools that we use, like using options, leaps and things like that, there's a safe way, or I shouldn't say safe, but there is a more calculated way of using leverage, not the futures contract type of leverage, but leverage as in for every $1 move or 1% move in this underlying, I can move 2 or 3%, right? Without getting liquidated. Again, that's one of the powers of using options, is that you get that price leverage, but you have no liquidation risk as long as you have defined risk, right? As long as you're buying the option, or as long as you're net debit, pretty much, you're not running into like liquidation problems, right? So it's a way to get that price leverage without getting the liquidation risk. So there's all these tools that we use to get that extra alpha. Learn how it's done, yeah, and it's not gonna be something that you learn quickly, okay? It's gonna take some time to learn. Everything good in life takes time to learn. If it was easy, if good things were easy to achieve, everybody would be successful. All right? But that's not the case. Success is rare. Why is it rare? Because it's fucking hard. All right? Success is rare because it's hard. It takes dedication. It takes patience. It takes discipline. And discipline is rare. Discipline is very fucking rare. Most people don't have discipline. Most people don't have the mindset and the discipline to make money. They're too scared to make money. Yes. You know, a lot of you might be thinking to yourself, who the hell would be scared to make money? No, I would say most people in the world are scared of money. Most people in the world don't know what to do with money. Most people in the world, if they were to win the lottery, they would go bankrupt in 2 years. And it's true, 70 to 75% of lottery winners will go bankrupt within a few years. Because they don't have the discipline for it. They don't have the patience for it. It takes a lot of discipline. Everything good in life, whether it's like, you know, financial wealth, whether it's, you know, anything in life, a useful skill, a trade, you know, even a good partnership, a good marriage, a good family life, all of that takes time and dedication. And if you're not ready to put that type of time and dedication and investment towards your future, it's not going to work out. You know, it's like, you know, it's really funny when sometimes, you know, when people find out that I'm in financial markets, a lot of people ask me that, hey man, you know, real quick, like, man, you know, give me some tips on how to make some money, man. Like, you know, any quick tips? It's really funny. People don't go to a doctor and they say, oh man, you know, you have any quick tips on how to make money in medicine real quick? Like, who the fuck does that? Who the fuck would ask that, right? But the thing is, when you say you're in crypto or when you say you're in finance, that's the first thing people say, oh man, you know, you got any quick tips, man, for me? It's like, but they wouldn't ask a lawyer or a doctor that, you know what I mean? So it's funny. It's funny how people have this weird concept when it comes to like money. They think like, oh man, I just watched CNBC or Fox or Bloomberg. I watched a couple days worth of TV. I'm a market guru now. You know, like that. It's like, it doesn't work like that. It takes constant practice and all these things, you know, and again, the more exposure you get on a day-to-day basis, the quicker you pick up on these things. Okay. So I invite you to stay with us and learn with us, man. Yeah. So welcome to the crew, man. Welcome to the crew. All right. So I hope I answered most of these questions and like some of these concerns. Yeah. I mean, you know, and I think for the most part I did. When you said here, I'm a bit too embarrassed to go to some financial advisor at Fidelity. Let me tell you another thing. Yeah. I'll learn a secret. Financial advisors are salesmen. Let me say that again. Financial advisors are salesmen. All right. There are a few financial advisors that will give you really, really good advice, and they're very, very well knowledged in portfolio building and estate planning and multi-generational asset planning and things like that. But those types of advisors are really rare. And they're usually independent. But if they work for a company like Fidelity or something like that, they're just a sales associate. Okay, it's just a sales associate. What they're gonna try to put you into is like some sort of managed account where basically they're gonna try to mimic the S&P 500, but they're gonna charge you by like 1.5% for it. You might as well just get into an S&P 500 fund and tell them to kick rocks. All right, because they're not gonna do anything else for you. Okay, so if you are going to hire a financial advisor, shop around, make sure that they know more than just like how to pick stocks and things like that. Because honestly, you don't even have to pick stocks anymore. You can just be in an S&P 500 index fund. So then what value are they going to add besides getting you into some ETFs, right? Are they going to help you with an estate plan? Would you even benefit from an estate plan? You got to ask yourself that. Would you even benefit from that? Yeah? Would you even benefit from multi-generational asset planning? Would you even benefit from a living trust? I mean, most likely, most people will, but if what you're looking for is some sort of investment vehicle to generate alpha, that financial advisor is not going to help you, okay? At least achieving that. That dude knows less about investing and alpha than you do, probably. If you've watched one or two shows of Money Maxxi, you probably know more about finance and trading than the guy at Fidelity. I guarantee that. Most people that work for those kinds of companies, that financial advisors for these brokerage houses, they're I was about to make fun. No, okay. They're not shit, but they're salesmen. They're not really there to generate alpha. They're there to sell you a service so they can get paid. Okay? Just keep that in mind. All right. Keep that in mind. All right. 99% of fund managers cannot outperform the S&P 500. You might as well just invest in the S&P 500 index fund. And if you get an S&P 500 index fund, you don't have to pay no 1.5%. All right. You don't have to do that. All right. Just FYI. Anyway. So yeah, Mr. Engineer, thank you so much for that question. I think it really does resonate with a lot of people that are watching this. A lot of people probably feel the same way you do. So the fact that you spoke up, I'm sure a lot of people appreciate that, because I'm sure a lot of people are shy themselves. And, just like you said, like, I'm just embarrassed to ask because I don't know these things. Dude, a lot of people feel the same way too. Actually, it's really funny. I know somebody else who watches this, Money Maxxi. I'm not going to say who, but I talked to them on the phone the other day. And they say that, like, I got all these questions, but I'm even embarrassed to like DM you about them. And I'm like, dude, don't be embarrassed. Like, we're bros, man. I'm like, we're bros. You think I'm gonna lash out at you? Like, I won't even lash out at you in private, let alone like on the internet, man. Like, but even he, and this is my boy, and this is like, we're boys. Like, he's known me for years, and he was like, yeah, I'm embarrassed to even ask you, like, what these things, Money Maxxi and things like that. I'm like, bro, don't be like that. Like, don't be like that. We're all here to learn, okay? So we're all here to learn. There's sometimes that I even learn. So sometimes some community members will come up and they'll even tell me about some stuff too, man. I'm like, damn, I didn't even know that, man. So yeah, we're all in it together. We're all in this together. Anyway, so that's that. I think that was a great question. I think a lot of people are probably, wondering the same thing about, their own future, like what's going to happen to my job and all these things. To be fair, I don't think all these like layoffs are just because of AI. I don't think that at all. It's not. I mean, let's be really real. I mean, I'm not trying to fade AI or anything like that. I think AI can be a very, very powerful tool. In the right hands, it can be a very powerful tool. I can't deny that. I use it too. I use it, and I use it more often now than ever before. So I'm all for it. I'm all for efficiency gains and all that. But it ain't like AI got invented this year or last year. Like, most of these like mathematical algorithms that these LLMs and these models use, like all the neural networks and all the math behind it, was actually figured out in the 60s and 70s. So a lot of these algorithms were around in the 60s and 70s. Now, were they able to accomplish the same range of tasks as now? No, because they didn't have the type of computational power. Computers weren't that strong. Memory wasn't like, back then having like 256 megabytes, that was a huge deal back then. Now we're talking about terabytes at a time, right? But back then, it was a different time. Computational power was a lot more expensive. Computers were huge. Not many people had one. So yeah, but it's not like it was invented this year. No, the math for this, some of the algorithms have been around since the 60s and 70s. AI was blamed for the market crash of 1987, the 1987 Black Monday. They called it the algorithmic trading, the trading algorithms, which is basically like today's word for like AI, pretty much. But back in 1987, they already had electronic trading. They already had algorithmic trading. And even in the Black Monday of 1987, they blamed this technology for that. So it's not like it wasn't even around. Like even in 87, it already started making its way into industry and all of that into daily life, right? Now, I what is different now than in years past is that it's way more accessible, right? The average person can now use it. It's way cheaper than before. You don't have, and the learning curve is a lot less steep than what it used to be. That is true, all right? And there's a lot more automation behind it. That is true. That's one of the biggest differences. But it's not like these big companies like just got AI now, no, it's not like that. They've been at certain industries, especially in tech, have been using some of these AI processes that we are using now, that, Claude and all these like, chat bots and LLMs, they've been using this now for a few years, like even before COVID. All right. I remember in even when I was working at some of these banks and when I was consulting for some of these insurance companies, they were already using some of this stuff, these chatbots, LLMs, and all this stuff, and they were already using this kind of stuff back in 2018, 2017. All right. So I don't think all these layoffs are just all because of AI. I think. All right. I think it's a good scapegoat. Like, if you're the CEO of a publicly traded company and you're laying off a lot of people to save money, isn't it better to say, oh, yeah, because of the efficiency gains in AI, we're getting rid of all these people? Yeah, because we're doing so well, right? That's what you say on the surface. But it could be also because, well, also interest rates are going up, inflation is going up, costs are going up. So we got to save money because our margins are getting tighter. Like, saying it like that, I mean, it's the same thing, right? Either way, you're laying off people to save cost, but you can make it sound like a victory, or you can make it sound like not very savory, right? And I think that's more like that. I think that's the reality. I think a lot of layoffs is mostly because of the macro forces, the cost of money, interest rates, the cost of inflation, and the cost of wages and all this stuff, productivity losses, all this stuff that generally causes layoffs and things like that. I think that is more likely like the reason. But again, it doesn't sound good on your earnings call when you're the CEO saying these kind of things. It's better to say, oh, yeah, because of the efficiency gains in AI, we don't need as many people. Yeah, we're going to do cost savings because we don't need them anymore. Yeah, victory, guys. That's way more palatable. You probably get asked way less difficult questions if you say it like that, rather than saying it like, well, yeah, because of inflation, because of margins compressing, we got to save some money. Yeah, that you're probably going to get a lot more difficult questions from the media people, from shareholders, from managers, all these other people, all these other stakeholders. You're probably going to get a lot more difficult questions if you say it like that. So I think that AI thing, the AI is the reason why we're laying off a lot of people. I think, I think some of it is true. But I think you got to take that with a grain of salt. Okay, I think it's the grain of salt. I think it's more likely the macro effect. It's the inflation. It's the costs that are spiraling out of control. And let me tell you, service costs are spiraling out of control. We said this, I told you this in the beginning, full circle. I told you Iran, most likely what they're looking for is reparations of some sort, where they can charge boats $2 million, to go through the Strait of Hormuz with safety. I think that's what they're going after. Watch. If the U.S. and Iran agree on peace terms, and part of the agreement is that Iran can now charge $2 million per ship to go through the Strait of Hormuz, other countries are going to follow. Watch. Other port countries, like Southeast Asian countries, some European countries, maybe even, they're going to say well, gee, these Gulf countries are charging money for it. Well, why can't we? Watch. Everybody's costs are about to go up because of this. Again, that's inflationary. So not only is commodity prices, oil, food, all these things going up, service costs are going up, insurance rates have gone up, maritime insurance rates have gone up. And not only that, now the shipping costs are going up because now everybody's charging this new port fee or whatever you want to call it. Watch, that's inflationary. And inflation, that's why this is why service inflation is the stickiest inflation, because it causes every other service around it to also start going up. Because once one service provider increases their rate, everybody follows. All right. And this is why service inflation is the stickiest. And this is why services are usually the reason why inflation goes on for multi-years and multi-generations, because of service costs. So I think this is just another inflationary force, and so, we shall see. I mean, that is down the road. We'll see what happens. And so, yeah, we could see costs of all of our imports go way up. the costs of everything that we use. I mean, anything that requires shipping. I mean, energy, chemicals, goods and services. I mean, there's just so many things. I mean, it's just going to keep going up. So it's more inflationary pressure. So in that environment, you know, I do still think that interest rates will go up because of that. Because inflationary forces are going up, interest rates will have to go up as well too. And so when inflation and when interest rates go up like that, you know, multiples will contract on risk assets. Not only that, you know, it'll be a lot harder for people to borrow money, to get capital, things like that. So it's going to be an overall tightening effect. And I see that, you know, for the next year or two. So where do we hide in a place like that? And again, I told you this from last year. I told you this from the end of 2024. Brazil and Mexico. I still think Brazil and Mexico, they're the places to hide out, because, you know, these countries will benefit from all the costs going up because these guys are commodity exporters. They export food, soft commodities, even energy commodities, oil, gas, all this. Brazil exports it all. All right. So they are going to benefit probably the most out of all of this. All right. So I actually think, yeah, like if you want to talk about a safe haven, I know it's like, who in the right mind would ever call one of these emerging markets like a safe haven? I actually think Brazil is going to be I mean, yeah, there's going to be big pullbacks. So it's not like it's principal protected or anything like that. There are big pullbacks. I mean, emerging markets have huge pullbacks. But having said that, for the next year or two, in this inflationary cycle, in this macro environment, Brazil and Mexico, they are going to be outperformers. They've outperformed the S&P 500 already since the end of 2024. They've outperformed. I mean, let's not even talk about Bitcoin. Let's not even talk about crypto. I mean, crypto and Bitcoin have been in this wicked ass bear market for, you know, minus 40, 50%. So let's not even talk about that. Brazil has been going up ever since we got in. And by the way, Brazil pays a 4% dividend. So not only do you get that huge capital appreciation, you're getting paid cash to hold on to this. Name me another index that has growth potential that is paying 4% a year dividends. Name me another market that does that. I'll wait. There is none. There is no other market that does that. All right. So this is why I'm so bullish on Brazil. I know I got a couple of questions on that, like why Brazil? Out of all the countries, why Brazil? I mean, I've been saying why for like the last year, but I know we got some people that are new and things like that. So anyway, M, what's going on? Shout out to M. M, it's good to see you in the chat as well too. Shout out to the people I game with. M's really, really good at gaming. I mean, shit. Speaking of gaming, we were just talking about layoffs and things like that. Fortnite announced that they were having layoffs too. And they also, the Fortnite CEO said, oh yeah, because of AI, or because of AI, right? No, let's be real. Fortnite just increased their subscription costs, their subscription prices. They're giving you less V-Bucks now for it. So that's shrinkflation, right? They're giving you less for the same amount of money. Right, less V-Bucks for that battle pass or whatever, and you got to spend more V-Bucks now for the skins, right? So they're increasing all of their costs. They're saying their margins are being suppressed, and at the same time they're getting rid of all these core engineers. Is it really because of AI? Come on, you know. It's because costs are going up because they need to make more money and they need to like maintain margins. That's why. But again, that's not a very savory explanation. All right. It ain't savory to your like, because no company wants to look like, oh yeah, we're laying people off for the money, for the profit margins. You know, nobody wants to say that now. Right. AI has now become like the scapegoat reason to lay people off. And I think a lot of the layoffs that are being blamed for AI, I don't think it's really AI. It's because inflation is going up. The cost of money is going up. The cost of operating a business is going up. And they got to maintain their margins. All right. And again, there's two ways of explaining it. You can sugarcoat it and say it's AI. And because of the efficiency gains in AI, because we're doing so well, we can do more with less. Yeah, right. Okay. Right. All right. All right. I mean, again, you know, take it with a grain of salt. Over 1,000 employees. Yeah, that's right. Over 1,000 employees. And again, like the reason that they give you is like AI, you know? But again, like what I've been saying from before is that these LLMs, these chatbots, all these things have been around since 2017, 2018. These companies have been using it for 5, 6, 7, 8 years. So why now? When inflation's going up, when the interest rates are going up, when the cost of doing business is going up. Oh, now magically AI? Oh, no. And also, it's funny, too. What is it? Block, which is a Jack Dorsey company. Jack Dorsey's the guy that founded Twitter, but he also founded a financial services company called Block, right? And it was major news like a week or two ago. They laid off 10,000 people, and he called it because of AI. And guess what? The week after that, they had to rehire a big portion of the people they laid off because they found out, oh, we made a clerical error. We made a clerical error in laying off too many people. So it's like, well, you justified it with AI, and now that you realize you did too much, you're going to rehire them. And again, it just shows you it's not really because of AI. It's just the scapegoat that they're using. Okay, it's the scapegoat that they're using. And so, yeah, I think any company that's saying, yeah, we're laying people off because of AI, I think it's just like, I think it's mostly it's bullshit. It's bullshit. And again, like, as somebody who's worked in corporate America, they've been using some of these like technologies, like, and again, yeah, I know there are differences now than even back in 2017, 2018. Yes, it's way more accessible to retail, but at like the corporate level, they've been using AI. They've been using these systems since like before COVID. Okay, since like I remember like 2017, 2016, 2017, we were already implementing this like everywhere in our business. So now we're gonna lay out? No. Around the timing of inflation coming up and with the economy the way it is, no, it ain't a coincidence. It's not a coincidence. It's mostly because of that. It's mostly because of costs. Costs are going up, and businesses need to save money. That's flat and simple. That's the reason why they're laying off. It's not because of AI. You know, I think that's a scapegoat answer. But anyway, but I know a lot of people are going to get upset when I say that, but it is what it is. I know there's some like AI maxis out there, especially amongst the crypto crowd. All the crypto bros are AI maxis. Hey, I love AI too. I love productivity gains, but it's like some of you motherfuckers are using AI for like, what the fuck? One dude, man, dude, I swear to God, I'm not even making this up. One dude was like, he was like, I was so shocked. He was using AI to ask it how to deal with certain people in his life. Like, bro, you're a grown ass man. You're supposed to like have certain life skills, bro. All right. Like asking ChatGPT and Claude how to deal with your mother nagging at you for not calling her enough is dumb as fuck. Just pick up the phone and call your mom, damn it. You know, like, don't ask ChatGPT why she's mad at you. Like, what the hell, man? You're a grown-ass man. There's some things, man, you gotta be able to figure out on your own, all right, and not ask ChatGPT for it. That was crazy. That's the craziest thing I saw. I was like, my boy said that. He goes, I asked ChatGPT like how to deal with my mom like calling me and nagging me. I was like, bro, like you're a grown man, dude. Like you haven't called your mom in a while. Call your mom, bro. Like be a man. You know, love your family. Look after your family. Only, you know, remember in Godfather 1, what did Vito Corleone say? Only, you know, do you love your family? Because only a real man loves his family. And I think that's true. Only a real man loves his family. Don't forget about your family. Don't forget about your loved ones. Life is short. We only got one life to live. Make sure you keep in contact with your loved ones. Always. You know, why do we try to make money? Why do we try to better ourselves? It's for our loved ones, right? In the end, you know? So perspective. All right, guys. Well, anyway, I'm starting to talk about like parents and this and that, which means it's time to log off. All right. So anyway, guys, this was fun. I know I said I was gonna run through like how to open up a Claude bot and all that stuff and Claude and all this, and how to like open up an AI agent. I will do that next time. The only reason why it took me a little bit longer was because I am also going to show you how to set up your own VPS, your virtual private server. But I had to do a little bit of like, I just had to make sure that the VPS that I chose was actually safe and reputable. And it took me a little bit longer than I thought to do all this research. I should be done with everything by the weekend. So I'll help you. So by next week on Money Maxxi, I'll show you how to set up your own VPS, your own virtual private server. I'll try to find one that's also very, very cost effective because I know a lot of people are on a budget. So I'll try to find one that's like kind of like cheaper, that's still safe, that has all the good security protocols and everything. So I'll find us a good VPS. I'll try to get us a discount as well. I'm reaching out to companies and seeing if we can get a discount for our community and things like that as well. I'll also show you how to set up your Claude bot and your OpenClaw and all of that on your VPS so that you can keep your private data safe. You don't have to run it inside your computer because I have seen reports where you download an AI agent on your computer and all the little saved like credit card informations and this and that, it starts accessing it. It starts doing all this crazy stuff. So I was like, ooh, no. I'm going to show people how to do it on a VPS to keep your data segregated. Keep your personal data on one machine, keep everything else, your AI stuff on a different machine. And I'll show you guys a cost-effective way of doing that. And I'm just doing the last few due diligence, but I will show you guys how to do that next week. I'll have a tutorial. We'll do it live together. And we'll even like maybe we'll even create like a few simple indicators together, like all AI, maybe all live and stuff. We'll do that all together too. So, and guys, if you have any questions regarding financial matters, market matters, investing matters, you can always DM me. You can always come up to the Discord and join us in the VC as well. And also in that Discord, I put all my live trade alerts. Every time I make a trade, it's live in there. You don't even need those live reports because I already tell you guys what my levels are. We plan our trades well in advance. I mean, we talked about that Brazil trade for like 6 months before we took the trade. So, I mean, there is no rush in any of this stuff. We like to play the game strategically, all right? It ain't just like shoot from the hip. We plan things out. So, but if you do want to know exactly when I enter and exit, I post it all in the Discord, and I do it all for free. I will never charge a dime for anything in my Discord, like for Discord access or anything like that. I would never charge a dime for that. You guys are always welcome to come through and trade some ideas with us and just talk shop with us. Anyway, guys, we're going to be back on next week, every Mondays and every Thursdays at 7 a.m. Eastern. You know we go live for Money Maxxi. We talk all things money. You know your boy Rooster is here to help you maximize all those returns. Guys, thank you for being here. I want to thank everybody that was here. You could have been anywhere else in the world, but you decided to be here with me, and I do appreciate that 1,000%. You know who clucking loves you, man. It's your boy Rooster, as always. Okay, guys, I'm signing off for the day. Peace.